community, but you want to know what those numbers are so you can see how your conversions are working. And so in this example, last bull market, peak bull market, our customers were bringing in about 50,000 users into the sales. This was no bots, like real people. And so if your target is 50,000, then you might want to see, how many announcements do you need to make? So like in your first 3 announcements, you might see that like, okay, it's increasing by 1,000, our user numbers increasing by another 1,000. And so we might want to increase our announcement calendar. So we might want to delay launch a little bit and slot in a few more announcements of activities that we want to do, and sort of like take a little bit more time, figure out what's working, what's not working. Sometimes you'll see these numbers go really fast. So sometimes people announce a Discord, the project's pretty mature, and so they'll bring in about 10,000 users per hour into the Discord. And so if stuff like that happens, set your targets higher. Or maybe, that's the initial bump because you put in a lot of effort. People are waiting for you to launch or announce something. Now that your socials are open or your Discord's open, everyone piled into that. So maybe you're looking at incremental growth. So, maybe 5 or 10% growth every month is considered good for you. So again, there's no right or wrong answer. Everyone's at a different stage. You just have to set a target KPI at launch and then figure out how many announcements, what's your announcement calendar, what's working for each announcement, what's not, and then is my user number increasing sufficiently to get there. So this is how to stay calm and stay rational as you're going towards launch, and to make sure you're taking sort of a methodical approach to getting to the numbers that you need. So I'm going to go into tokenomics, and before I get into tokenomics, some of the projects that we've seen execute really well have had different community groups. And so they have groups of folks, for example, that are more technical, that are, setting up nodes, for example. So you might have folks that are just running a lot of nodes on testnet. They're expecting some sort of airdrop at launch. You might have folks that are less technical. So they're there for the community. They're there for the memes. So your community, as you grow, might sort into different groups. And this is a very, very good thing. Because now, if you're opening up a sale later, you can do different sales for each of these groups. And again, you now have a marketing drumbeat of different sales that you're opening, and the marketing is going to compound on itself. More people will hear about it. More people will tell their friends with every announcement, and then you can do a public sale at the end and capture a lot more users. And so that's sort of like one thing that could be super, super helpful. And when thinking about tokenomics, each of those groups can basically get slotted a different allocation. For example, if it's if it's just airdrop, but if you're doing a sale, they can maybe get slotted into different rounds with different incentives. So if they're running nodes, maybe they get more tokens. If they're normal community members, maybe you're going for very large numbers, but they get smaller amounts per user. And so if you can segment your community into different groups, that's usually a net good. The downside there is it's a little bit more to manage, but that's usually a net good, and it shows that you have a mature community with different people supporting the project in different ways. And so, there's always more technical people, there's always less technical people. There's going to be people with too much capital that just want to invest. And so it's good to sort of like curate these groups if you have the resources, and to cater to them in the tokenomics. I'm going to start with, what is the number one thing that people screw up? And I think the number one thing that people screw up here is not necessarily respecting the community enough. And if you think about, again, just backing into what makes Bitcoin great, what makes Bitcoin great is that a large, majority of the supply is community owned. And a lot of, all the miners are basically community run, et cetera. And there's no sort of like insiders that are profiting. And so when I'm feeling lost in what direction to go, I always, again, back into like Bitcoin values and then work backwards from that. So in your tokenomics, the number one thing is going to be respecting your community. And so, how to think about distribution. Um, you know, if uh, if it's about respecting community, you're going to want to be able to communicate to your community that, hey, over 50% of the supply is going to go to the community in some way or the other. It doesn't have to be an airdrop. It can manifest in different ways. It can manifest in community bounties. It can manifest in salaries to ambassadors in different countries that are working to raise awareness for the project. But the number one thing that matters is giving a majority of the tokens to the community. And then tokens for operation, tokens for the team, tokens for investors. And I'll give some heuristics. Actually, I can talk about it now if you guys want to take notes. Tokens for team, 10% is low, 30% is on the high end, 20% is generally in the middle. Tokens for investors, 10% each round is very standard. Again, higher is more aggressive in favor of the investor, and then lowers more aggressive in favor of the team, founders, community. Community always 50% or more. And then you're going to want some allocation for operations. And this can be 10 to 30%. I'm going to give an example token table at the end if you guys want to screenshot that as well. Oh, here it is, actually. So here's an example token table, and this should add up to 100%. Maybe it doesn't. 40. It should. And so team 30%. So again, more aggressive to the team. One pitfall to think about is, what if one of the founders leaves, which always happens. And so that's something to sort of think about. So do you want, founder tokens to vest over time? Do you want it to be milestone based? So, hey, every additional round that we do, founder's going to get a little bit extra tokens out of the treasury. And so again, something to have a discussion with your team about early on is like, hey, it happens a lot. It's normal. Someone gets bored, they leave. Maybe it's too stressful, they leave. And so how do you account for that at the beginning? And it always feels worst when you're, one of three founders and you're still running full steam and everyone else has the same allocation. So think of it from that perspective and have that conversation up front. Investors, you're going to want to plan for, maybe 2 or 3 rounds. I'm sure Bitcoin Startup Lab has good advice around the right planning for that. Probably a lot better than me, but I try, for myself, plan 2 to 3 rounds and what allocation do I expect to give at each one and at what valuation. And then community, in this case, targeting over 50%. So this gets to 55%. So you can see it's sort of a mix. So this is saying whatever's in the treasury goes to community because it's token owned, token governed. 2% airdrop, which is very standard. 5% is going to go to a community sale. One thing to think about here is know what your token price is going to be at first fundraise. What's your expected token price valuation? Maybe do 2 fundraises before you do a public token sale. So what is the token price valuation? And how do you do a community sale where the valuation isn't too high? So a lot of projects today, they're at a 3 billion valuation, all privately funded. They can't do a token sale now because no one's going to buy at a 3 billion valuation. And so do that planning up front and have some sort of idea for what's a good valuation, what's not. And always better to be less greedy than more greedy when you're, early stage. Just be humble and sober about where your metrics are and where you are. Developer grants, that fits in the community bucket. Sale fits in the community bucket. Airdrop, community, treasury can be interpreted as community or not, but in this case, I just have it as community. And then operational stuff that can go to the operational company, or it can go to market making, exchange listings. Again, something to budget for and think about as you're moving forward.